Can you explain the origin of the $20 billion in net new money for UBS and if there was any significant inflow from Credit Suisse?
Well, first of all, we were very pleased with the fact that at times of distress in the market, generally the first quarter was very challenging. We still saw clients looking at UBS as a safe haven, and the inflows were coming in from all regions and from different sources. And in that sense, we are very pleased that particularly also after the announcement of the transaction of the acquisition of Credit Suisse, we still saw inflows coming into our bank. So a sign of confidence of our clients.
Was the $7 billion that came in after the transaction closed from Swiss money or not from Credit Suisse? Can we consider it as Credit Suisse flow?
No, it was generally across the board, and you can see that those numbers were also well diversified. I would say also one main driver was the US. So the confidence in this transaction was also shown by our international clients having strong faith in our ability to execute.
You received $7 billion in this quarter and 10 days after the deal, but some expected more. How do you respond to that?
Well, obviously, we can demonstrate that there is enough competition out there. So anybody fearing that this transaction creates too much concentration is wrong. So I think that we are pleased with the inflows we saw. We always say that we will not be the only beneficiary of this transaction, and the numbers seems to show that.
There is a trend towards money market funds happening in every bank. Do you believe the rush to such products has peaked? Or has the peak of this rush for cash in money markets already passed?
Well, it's difficult to judge. I mean, what we have to do is to stay close to clients and do the best for them. At this point in time, we do understand that at least part of their liquidity has to go into money markets or treasuries because they have a better, in some cases, better pickups in their yield. And so it's very natural, and we are helping clients to make the best choices. And we saw very strong inflows also in our own money market funds that we manage within asset management.
Net interest income in wealth management increased by over 30%. Are we at peak rates? Do you anticipate rates topping out 5% or could it reach 6%? Some speculate on the US rate cycle.
The case is only based on the fact that if you see higher rates, it means that inflation fight is not successful and is necessary to go to that level. I would say that the priority number one nowadays is to fight inflation, even if it costs a small recession. I believe that the social cost of high inflation over time will be much higher than having a slowdown in the economy.
Despite challenging market conditions, UBS has managed to attract a significant amount of new money from clients, indicating confidence in the bank. The inflows are well diversified and coming from all over, demonstrating UBS appeal as a safe haven for clients. The $7 billion inflow after the Credit Suisse transaction closed was not just from Credit Suisse, but from a variety of sources and regions. UBS is seeing a trend towards money market funds among clients, which may be due to the better yield that these funds offer in some cases. Net interest income within wealth management has increased by over 30%, which is a positive sign for UBS. The fight against inflation should be a top priority, even if it means a smaller recession. The long-term social cost of high inflation is likely to be much higher than that of a short-term slowdown in the economy.